Hey guys, so the CPI numbers came out on Tuesday and they were higher than what was expected by the economist and the analyst. So the numbers were around 8.3%, whereas the economist and the analyst, on the other hand, were expecting it to be at around 8.1%. So this increase of 0.2% doesn't sound that dramatic, right? Well, it is, and I'll get onto that in a moment. So first of all, this increase in itself should be a point of worry because the inflation is still increasing when the Fed is taking measures to cool it down. And Powell has been saying it that okay, this is temporary and it will cool down since past few months, but we can see the results that it is not. Now, why I'm saying that it is dramatic? Okay, if we compare in the past, if we take the CPI numbers from the past few months, we could see that the majority of the inflation was actually being driven up by the oil and the gas prices. So the investors and the smart investors, or the analysts, were thinking that okay, this is temporary and the war is going on, and of course oil and gas prices being one of the most volatile assets, they will eventually come down and they will take down the inflation with them. But now this is not happening. So if we see the numbers carefully, we will realize that the oil and gas prices are actually coming down, but they are not taking down the inflation with them. In fact, the service sector is driving up the inflation now. And this is a point to be worried about, my dear friends, because these small steps, what the Fed is taking now, is definitely not helping. And we can see these from the results. And since I'm in Europe, I should also be talking about Europe. I can see the similar effect happening in the European economy. So I'm sure that the ECB will take some drastic measures to cool down the inflation. We are still waiting for the inflation numbers from Europe, but I definitely think that these won't come down as the European Central Bank was thinking. So we are seeing the similar effect in these two different economies and one of the biggest economies. So definitely this is a point to be worried about. And that's why the stock market was tanking, because the investors were definitely, who can see these results carefully, realized that okay, these 0.25% of interest hikes is definitely not helping. And trust me guys, why wouldn't big institutions and retail investors take out their money and put it into the bond market, where the bond yield, 10-year treasury bond yield, is yielding much higher than 2 or 3%. Also what you get in a dividend income. Or if you check the free cash flow or price to free cash flow for big companies, like Meta Platforms or something, you will see maybe a ratio around 2 or 3%. Or the percentage, sorry, you would see around it to be at 2.3%, whereas the bond yield will yield you more than that. So why wouldn't the institutions or retail investors take out the money from the stock market and put into something where they are getting guaranteed returns, first of all, and higher returns, than other big giants in the stock market? So that's why the stock market was tanking, and I do think, that's my personal opinion guys, I'm not a financial advisor, and I do think that the stock market will continue to fall until and unless some good measures are not taken, or drastic measures are not taken by the Fed. This hawkish strategy is definitely not helping, and that's why they have to be more hawkish in order to solve this problem. And what should be done in order to hedge your portfolio against this? Well, I have said it n number of times in my previous videos as well. Like, choose those businesses which you think will survive. Like I said just few seconds ago, that there are businesses which might be yielding you less, if you take some metrics, than what the bond yields will be yielding you. But these businesses, if you think that they have the power to pass on the cost, first of all, to the consumers, or they have a good path to profitability, then yes, you can invest in them. In fact, if the yield is less from these businesses which you think can thrive and which you think will be successful in the future, then you are getting them at a value cost. Yeah, you are getting them at a cheaper price. So why not to go and invest in them at a cheaper price, at a discounted price? So basically that's it, guys, and this is what I wanted to cover in this video. The reason behind the stock market fall is, yes, the inflation is not cooling off and there are no signs of the inflation to be coming down until unless, like I said, the players or the people handling the economy will take some drastic measures. And yes, I do think similar thing will happen in Europe as well. So please get ready, don't panic, do your investment carefully, and invest into those businesses which you are really confident about, the businesses who you think can have, if they are not even profitable now, but you think that they will be profitable in the future, go ahead, because those businesses are the ones which will crash the first. So you can think, if you think like me, I would wait for that opportunity. And even if I'm invested in that business, particular business, I would be averaging it down. I would not be selling at a loss. Why would I? When I have the opportunity, because I believe in that business, because I know that business will be profitable someday, why would I sell it instead of buying it at a cheaper price or averaging it down at a cheaper price? So that's the mindset, guys, which you should be having right now when the market is panicking, when not the market, but the people are panicking and the market is falling down. This is the kind of mental mindset you should have to survive in such situations. So that's it, guys. That's all I wanted to cover in this video. I will see you in the next one. Until then, stay safe, stay healthy, and ciao.